Okay, ladies and gentlemen, please meet Sir Martin Sorrell. Where is he? When you see him, I want a huge... Ladies and gentlemen, Martin Sorrell. I think it would be nice, Martin, please meet the Latin American media industry, Please, you just turn around, stand up, give a little wave at the camera. Please, come on, come. Just turn around, there you go. There you go. The conference. Good morning. Excellent. So we're going to turn up your sound a little bit. Okay. Martin, thank you very much for joining us. I know, thankfully, you're in New York, so the time zones are kind. Can you see us okay? Okay, excellent. We can almost hear you. I think we just need to check on the audio-visual. I don't want to conduct this interview in sign language or semaphore. So if we can just pause for 1 second, we'll get our technicians just to make sure that the sound is working okay.
Our sound is all right this end.
Okay, I think we're... Right, we can now hear you. There's a bit of a buzz on the line, but I'm sure it'll be corrected while we go through this interview. Okay, so Martin, let's start with the economy here in Latin America. Of course, all those events is in Miami. We've drawn delegates here from all across the region. And I think, one of the main concerns everybody has is that you've said yourself that this few years ago was the decade of Latin America and a great opportunity for the continent. And yet we're here all quite concerned about the macroeconomic situation, particularly in Brazil and Mexico. How do you read the situation here? And do you think there are positive signs ahead?
As the market that's strongest at the moment, it's certainly for us, it's growing at double digits. Then I would probably put China, which has slowed quite significantly, and the president is here in the US as we speak, and trying to assure people that China will see its way through short-term difficulties, which I agree. I mean, it took the United States 100 years to become the world's superpower, and we had events like 1929 and the Great Depression in the course of that 100 years. So there will be bumps in the road. Probably you could describe them as speed bumps. So I would put India first at the moment. Then I would put China. Then I would put Brazil. Obviously, Brazil is very challenged. The political leadership in Brazil is very challenged at the moment. I think Dilma has about an 8% popularity, positive popularity poll at the moment. So, and it's very challenged with all the issues around Petrobras and the like. So, and then last but not least would be Russia, where the Ukraine and the sanctions have made Russia, particularly we saw a sharp deterioration in Q2, has made Russia a very difficult market, and I don't think that's going to sort of change for a significant period of time. But, I remain, from a personal point of view, a bull on all those markets. I remain bullish on Latin America. For us, Latin America, despite the currency devaluations against the dollar, is about $1.7 billion of revenue out of a total of 23 billion. Still dominated by Brazil, but not as dominated as it used to be. Brazil, for us, is about $600–700 million of revenue out of that 1.7. It used to be 1/2. So Brazil, the rest of Latin America has grown faster in the past few years. For us, Argentina, probably because of our relationship with Globant, is the second largest market, and Mexico the third. But you mentioned Mexico along with Brazil. I wouldn't put it in quite the same category. President Nieto was, I went to the inauguration in Mexico City 3 or so years ago, and there was a tremendous amount of optimism. I think he had a 13-point plan, and it was a very ambitious program. But it hasn't worked out the way that he, or indeed we, would want it to work out. And obviously Mexico has a number of challenges in all the areas that we see across Latin America. And in relation to your comment about this being the decade of Latin America, and it's true with Luis Moreno in Cartagena about 2 or 3 years ago, we did a presentation where the two of us were talking about this decade being the decade of Latin America. We had the World Cup in Brazil, which was a very successful and significant tournament. We'll have the Olympics in Rio next year, and I'm sure that will be visually stunning, and it'll be excellently organized, and it will be a marvelous spectacle. But Latin America, to the heart of your question, has not fulfilled the promise that we anticipated 3 or 4 years ago. Now, to be fair, the world is probably not. I mean, if we look at worldwide GDP growth, it's around 4, 4.5, 5 nominal, about 3, 3.5 real. Inflation is next to nothing. In fact, forecasts for inflation this year have come down quite sharply. It was that we were looking for 5.5 nominal, and now people have taken down their forecast quite significantly. Real GDP continues to grow at about 3, 3.5%. In that context, Latin America does not look bad. Now, if I look at WPP and its future is very much based on four key things. Fast growth markets, of which Latin America are key, along with Asia, Central Eastern Europe, Africa, and the Middle East. Digital, which is already almost 40% of our business, and we think will be 40 to 45% in very short order. Data, which is 25% of our business, and the application of technology, and that's about right in the context of our business. And lastly, what we call horizontality, which is getting people to work together for the benefit of our clients. The first one of those is about geography, and that's very much built around what's happening in Latin America. But these stresses and strains, I think, are short-term, and I don't think, in our case, or indeed in anybody else's case of our clients, there will be a reversal of their strategy. I think Latin America remains front and center in terms of people's thinking, clients' thinking. It's the mature markets that still grow, although they're doing better. Yeah. The US, the UK, France, Italy, Spain, Germany are doing better perhaps than they did a few years ago. It is still true that those fast growth markets of the BRICS and the next 11 of Asia, Latin America, Africa, Middle East, and Central Eastern Europe continue to outperform on a GDP basis, and that's where the growth is coming from.
And what would you like
the things that we see going on in the West, in the mature markets, you see going on equally in Latin America, if not more so, because one of the advantages that Latin America has is it has less sort of legacy infrastructure. For example, Latin America has leapfrogged to the smartphone, mobile age, and almost passed through the desktop PC phase, whereas the mature markets of the US and Western Europe have had to go through PC desktop phase in order to get to smartphones. You see that in China, you see that in Brazil, you see that in Russia, you see that in India and elsewhere. So all in all, I think these are short-term stutters, these are short-term lapses, and in the longer term, I think we'll see a maintenance of that improvement that we all hope will continue in Latin America.
And what would you
Certainly,
like to
if it doesn't, Charlie, you won't be having successful conferences in Miami.
Yeah. Well, we hope to continue successful conferences. I mean, we've seen, difficulty, particularly recently, with the value of the Brazilian currency. What would you like to see happen in this region to make this just a short-term blip, like you say? What needs to happen in this market to get the rebound that you are hoping for?
Yeah, I mean, you refer to the Brazilian real, but I mean, it's been the case that all currencies have come under pressure against the dollar, indeed against the pound sterling. You know, if you're a reporting company in dollars, it's getting very difficult for you to show reported growth on a like-for-like basis. It doesn't make any difference. If you're a sterling reporting company like us, when sterling had greater strength, a couple of years ago it was even stronger. In the last year or so, it's remained pretty strong, weakened a little bit against the dollar recently, but the euro has been the weak currency. So if you're reporting in euros, you get a reporting advantage. The yen, you know, has gone through the floorboards. That's part of Abe's three arrow strategy in order to improve the Japanese economy and reduce the risk of deflation or stagflation. I think these are short-term phenomena, that the fundamental underlying scenarios for the Latin American economy will in the long run be the correct underpinning. Now, having said that, if you're running a big company, you have sort of at one end of the spectrum, you have the disruptors, the disintermediators, like an Airbnb or an Uber or a Facebook or a Google, who are essentially in the disruption business. At the other end of the spectrum, you have the companies that are very focused on cost, the so-called zero-based budgeters, although we've known about zero-based budgeting for many, many years. So companies like 3G, companies like Coty, Valiant and Endo in the pharmaceutical space are all very focused on cost. So companies are faced, legacy companies are faced with disruption. They're faced with the pressure on cost. And in the center, you sit in the center, you have activist investors like Nelson Peltz and Bill Ackman and Dan Loeb putting pressure on cost, and on short-term performance. So it's a very difficult situation for people running companies. Now, if you're faced with slow GDP growth, both real and nominal, very little inflation, therefore little pricing power, there's a great focus on procurement and cost. And I think the answer to your question is, we in our industry have got to get our clients focused on growing the top line, and Latin America still plays a very important role in terms of the growth and development of the top line. If you look at the prospects longer term for a Brazil, longer term for a Mexico, with its close proximity to the US economy, which is growing better and fast, still only at around 2.5%, 3%, but growing faster than it used to. If you look at Argentina, if you look at Colombia, if you look at Peru, if you look at Chile, if you look at Ecuador, and all the other, and you look at the prospects for Central Latin America, the prospects, I think, in the longer term are very strong. By the way, if they're not, then we really are all in trouble, because these parts of the world will provide, in terms of population, in terms of young population, in terms of the future cities and the growing cities, will provide all the growth and the opportunity that we need. So what we have to do is really get our clients to focus on top-line growth, the areas of the world that are going to grow faster, and the areas of the world where we see innovation and digital becoming more important. And of course, just one other thing, okay, Charlie. Okay. Sorry to go on so long. If you look at other growth opportunities, the emergence of Cuba now, 11 million people. A lot of people a few years ago would have said that was not an opportunity. We now have Cuba is the 112th country we operate in. We have our man in Havana now. So we're seeing new growth opportunities in the region as well. So it's not all doom and gloom. If I take just finally Brazil, I'm a great believer in the finance minister's policies, Levy's policies, that he will he is trying to implement changes that will make a significant difference to the growth rate of the Brazilian economy. But it is going to take time. It's going to take another 2 to 3 years, I think, for Brazil to recover. To show our confidence, as you may or may not know, in the last week or so, we've made 2 further investments in Brazil, small companies, but really important digitally based companies with good growth prospects. So just to underline our confidence in the economy, and as you know, we made a major investment in Ibope a year or so ago as well, at a time when Brazil was starting to look more challenged. But my view is in the longer term, there are very strong prospects.
Well, I think that's a really, really good point, a great way to start this event as well, with that note of optimism. Going back to, you mentioned clients, and some of these clients that are now looking at sort of the zero budgeting and putting a lot of pressure on the agencies. There's probably about $28 billion of pitches going on right now among some very serious clients. I don't think we've seen the like of this in the history of the media buying business, with so much up for grabs and potentially so much accounts, so many billings changing hands between agencies. Do you think that's an inevitable sign of competition, or do you think there's a sense of unhealthiness in the just the sheer amount of competition that's happening between the agencies and the clients right now?
Well, I think clients are facing the pressures that I mentioned: disruption at one end, zero-based budgeting at the other end, slow growth, no inflation, no pricing power, rise of procurement and finance in order to deal with that situation. It's only natural they would look at their biggest, what is arguably that one of their biggest, if not their biggest P&L items, media costs. I mean, clients often say to us, "You're our biggest supplier." I wish that was the case, because what they're referring to is the media cost rather than our agency fees or whatever. But I think there's a natural focus on media and media cost because of size. They look at the changes taking place in the digital marketplace. They look at changes taking place in terms of media fragmentation, the challenges to the legacy companies, the legacy media companies, the challenges to traditional print, felling trees and distributing newsprint to print newspapers and magazines, the challenges now that are increasingly there to linear TV, the questions over measurement of offline, with a higher hurdle for measurement, and measurement online with a lower hurdle. I mean, 3 seconds for a video spot with 50% of online video, the sound not being on, is a very challenging metric to say the least. So when Philippe Doman at Viacom says Nielsen's not measuring us correctly, he's right. And he may not be totally correct, but he's directionally right, because the standards for measurement are different. There's you may have seen the article in the Financial Times yesterday or the day before about false ratings, about bots, robots watching video rather than real people. And effectively, one of our clients is very focused on what he calls the 3 V's. That's value, viewability, and validation. So these are all issues that are coming at clients with increasing rapidity, and they want to try and sort it out. They're uncertain, and I would say even agencies are uncertain about what the correct way to move is. So I think this leads to tremendous uncertainty and a desire to improve performance, effectiveness, better work, and efficiency, lower cost.
You mentioned some of those,
and you can't fight it.
Yeah, you mentioned some of the impediments to growth of digital, such as bots and ad fraud. How scared are you, running big agencies as you do, of the ad blocking software that's beginning to be rolled out across multiple platforms?
If you saw that I think the most popular ad blocking app has been withdrawn because the originator of it felt uncomfortable. I mean, he summed up the problem, which is, if you block the ads, the cost of content rises, and content may not be available to everybody, and may not be available to everybody at the quote unquote right price or the lowest price. So, we saw this with PVRs. I think if you do the maths, potentially ad blockers would affect about 20% of the digital market. So it is significant. It is a concern, but you have to look at the implications. And it was exactly the same with PVRs. What we have to do as an industry, as we did with PVRs, is to make sure that the creative products that we have, the creative ideas, the big ideas, are even more powerful and overcome any technological threat that people have. I mean, there was a time when advertising was more entertaining than the programs that filled in between the ads. There's a question about how much time you devote to advertising. There may be some markets where it's too much and too disparate, so you have to look at that too. But effectively, it means that we have to do a better job of engaging the consumer's attention.
Now, one of the digital phenomena that's happening right now is this rise of the influencer class among the millennial set. And we have here at the conference, Martin, about 20 influencers from across the region. I think their combined followings are about 400 million, and they'll be speaking across the 2 days. Where do you and I are of a slightly different generation. How does
Speak for yourself.
Yeah,
John.
thank you. Thank you. Although I'm still the age that you started WPP at when you had your early midlife crisis, so there's hope for us all still yet.
You clearly look as though you're going through a midlife crisis.
Yeah, thank you very much. That's on Friday night. So anyway, where do you stand on influencers, and how does an agency respond to the rise of bloggers who command huge power in social media? How does an agency get involved?
Yeah, I think we've been very clear on that. We've engaged with them. I mean, if you look at, there are 3 areas that we've pegged out. Talent is important at any agency. But there are 3 other areas that we've pegged out as being important: technology, data, and content. So in the technology area with Xaxis, which is the largest programmatic, we don't call it programmatic, but others do, platform, we'll do $1 billion of billing this year. With AppNexus, where we have a minority interest with Brian O'Keller's AppNexus, which is the independent platform against Google and DoubleClick and Facebook and Atlas. We think we have to have an agnostic platform. Data, with our investment in ComScore, which, as you know, is very strong in Latin America in terms of online measurement, and our investment in Rentrack, which is looking at what we can do to improve offline measurement, and our investment in Ibope in Latin America is very important in that context too. So there's data, and then there's last content, which really impinges on the influencers, or the influencers are part of it. So you look at our investment originally in Media Rights Capital, which we've stayed in, which is House of Cards, Bruno, Borat, Ted 2. Our investment in Fullscreen, which 100 YouTube channels on which George Stromboulos used to be at Google with Peter Chernin, now controlled by AT&T, but we remain an investor, and Peter Chernin remain an investor in that. Our investment in Vice, we're a 10% shareholder in Vice, which has been very prominent in developing the roles of those influencers you mentioned. Our investment in Refinery 29, which is a female millennial site, which is, as you've seen from recent press comments, going global. So our investment in all those types of assets, where content, our investment in Snapchat, in Truffle Pig, together with the Mail Group, which we announced at Cannes. So these are all examples of content where we see big opportunities to develop millennial millennial influences in the context of those. So
we have truffle. We have truffle.
The answer is embrace them, and try and build them up.
We have Truffle Pig speaking on Friday, actually, which I think will be fascinating. Now, look,
Good.
So Martin, I want to give, we're getting quite short for time, but I really want to give the delegates here a chance to ask you a question.
Okay.
Please, we're holding up the microphone. Hands in the air. Who would like to ask Sir Martin Sorrell, Chairman and Chief Executive of WPP, a question, ladies and gentlemen?
You promoted me again. You're just a simple CEO.
You've scared them away. Do we have a question? we must have one, surely. No, goodness me, you have completely satiated their hunger and curiosity.
Well, what they can do, Charlie, is my email address is msorrell@wpp.com. They can send me a question.
Right, okay. So that's it. I want 1,200 questions to Sir Martin Sorrell by the end of today. Martin, thank you very much for your time. We've run for time. You're going to get a huge round of applause. Ladies and gentlemen, Sir Martin Sorrell kicking off our conference. Thank you very much. See you soon.
Thank you, Charlie. Good luck with your midlife crisis.
Thank you.